IRS says to expect smaller tax refunds this year. Here's why. According to the IRS, if you expect a tax refund in 2023, it may be less than this year's payment. A federal refund is typically issued when you have overpaid your yearly taxes or withheld more than the amount owed. Your annual balance is determined by subtracting the greater of the standard or itemized deductions from your adjusted gross income. Refunds may be smaller in 2023, the IRS said in a November news release about tax season preparations. Because there were no economic impact payments for 2022, taxpayers will not receive an additional stimulus payment with a 2023 tax refund. Here are the 10 most significant tax changes to prepare for this upcoming tax season. 1. The standard deduction for 2022 has increased. The standard deduction typically rises slightly each year, in line with the rate of inflation. For your 2022 tax return, the standard deduction has been increased to $12,950, up $400, for single filers and to $25,900, up $800, for married filers filing jointly. Most taxpayers with simple tax returns claim the standard deduction to reduce their taxable income. If you get a traditional paycheck from your employer and aren't eligible for many special deductions or credits, the standard deduction is probably the best option for you. If you prefer to claim expenses or individual deductions, such as self-employment tax breaks, you would not take the standard deduction. 2. The income tax brackets are also higher in 2022. Income tax brackets were also raised for the 2022 tax year to account for inflation. Your income bracket refers to how much tax you owe based on your adjusted gross income, which is the money you make before taxes are deducted, excluding itemized exemptions and tax deductions. While the changes were minor, if you were at the bottom of a higher tax bracket in 2021, you may have been bumped down to a lower rate for your 2022 tax return. 3. The child tax credit is back to normal. While the child tax credit was temporarily expanded in 2021, including eligibility for more dependent children and advance payments, this is not the case for your 2022 taxes. The CTC has been reduced to its pre-pandemic level of $2,000 per child or dependent, and it is now only available to children under the age of 17. The credit, which was previously fully refundable, is now only partially refundable to some lower-income parents, and advance payments are no longer available. Partially refundable means you can only get a portion of this credit back as a refund, but the entire amount can be applied to your tax bill. However, if you are eligible, you should still claim the CTC in 2022. It can help boost your refund or offset a tax bill. While federal benefits have been reduced, some states are providing child tax credit benefits this year and next. 4. Fewer filers will be eligible for the Childcare and Dependent Tax Credit. The Childcare and Dependent Tax Credit was also temporarily expanded in 2021, allowing those earning less than $125,000 to deduct between 20% and 50% of $4,000, or $8,000 for parents with more than one child, in qualifying child care expenses. It was also refundable. This tax break has also been reduced to what it was in 2020 for 2022. Parents with one child can now only claim 35% of a maximum of $3,000 in qualifying expenses, for a total of $1,050. Parents with more than one child may receive up to 35% of up to $6,000 in qualifying expenses, up to a maximum of $2,100. The main distinction is the income requirement. To receive the full credit in 2022, you must have earned $15,000 or less, a significant decrease from the $125,000 income threshold in 2021, though households earning up to $438,000 will receive at least partial credit. 5. If you don't have children, it's more difficult to qualify for the Earned Income Tax Credit this year. Last year, more Americans were eligible to claim the Earned Income Tax Credit on their 2021 tax returns. This year, the EITC reverts to its pre-pandemic rules. If you do not have children or dependents, the maximum EITC claim for your 2022 tax return is $560, a $942 decrease from last year's maximum of $1,502. The age restrictions have also been reinstated. You must be between the ages of 25 and 65 to qualify. However, due to inflation, the income requirements for the EITC and the maximum credits for those with children have increased slightly. 6. If you had your student loans forgiven, you may owe state taxes. Despite the fact that widespread federal student loan relief is still on hold, you may have received student loan forgiveness through the Public Service Loan Forgiveness Program or another similar endeavor. If you had any balances forgiven in 2022, you will not have to pay federal taxes on the amount canceled. This is due to a provision in the 2021 American Rescue Plan that exempts forgiven post-secondary education loans from federal taxation until 2025. However, in a few states, forgiven loan balances may be taxed. Indiana, Minnesota, Mississippi, and North Carolina have all confirmed that any student loan debt relief will be taxed on your 2022 income tax return. A few other states may follow suit, though specifics are still being worked out. If you live in a state that taxes forgiven student loans, you may also be liable for county taxes on your debt relief. 7. You must report your crypto and NFT transactions. While not technically new, the IRS is making a more concerted effort to track cryptocurrency sales and trades in 2022. A taxable event occurs whenever you sell or trade your cryptocurrency or purchase an item with cryptocurrency. Cryptocurrency is currently taxed as property, subject to short and long-term capital gains taxes. This also means that you can report any cryptocurrency losses to help offset any gains. Since the value of cryptocurrencies like Bitcoin and Ethereum plummeted in 2022, if you sold or traded your crypto at a loss, you may be able to reduce your tax bill by reporting your capital loss. The same holds true for NFTs. And, while the IRS will flag any unreported crypto gains, if you fail to report a loss that could reduce your tax burden, the IRS will not adjust your return on your behalf. If you leave it off, it stays off, said Mark Stieber, Jackson Hewitt's Chief Tax Information Officer. Tax-deductible losses from virtual currency activity have real-world consequences on your tax return and can save you money. So, as I always tell people, if you don't fully understand something, you should seek advice from a trained and experienced tax professional. 8. PayPal, Venmo, and other third-party apps will notify the IRS of your payments. If you've been self-employed or freelance for a while, you're probably aware that you must report your earnings to the IRS. Because third-party payment apps are now reporting your payment activity to the IRS, your earnings will be even easier to access this year. While you must still report your earnings as usual, the IRS will be able to verify the amounts you report against the transactions provided by the payment apps. So, if you're $100 off, the IRS will find out. This new regulation may benefit freelancers. Platforms such as PayPal, Venmo, Cash App, Zelle, and others will issue 1099-K forms to users, making it easier to report your income. And don't worry, the money you gave to your children is safe from taxes. Only earnings sent through these third-party apps are taxed. If you had any self-employment income in 2022, regardless of how you were paid, Stieber recommends working with a tax professional to ensure you take advantage of every eligible tax break. Self-employed people have some of the most complex tax returns, and to be honest, some of the most lucrative tax benefits in the tax code to be aware of, he said. 9. Raised retirement contribution limits. Individual 401k contribution limits for 2022 increased to $20,500, a $1,000 increase from 2021. If you are over the age of 50, you can contribute an additional $6,500. For 2022, the total contribution limit, which includes your employer's contributions, is $61,000, $67,500 for those 50 and older. IRA contributions remained unchanged at $6,000 for the year, with a $1,000 catch-up contribution for those 50 and older. Contributions to simple IRAs were also raised in 2022, from $13,500 to $14,000. Those over the age of 50 can contribute an additional $3,000. If you have an IRA, you can continue to contribute for tax year 2022 until April 18, 2023, the tax filing deadline for the following year. Because the IRS raised the income thresholds for 2022, more Americans may be eligible for the Savers Credit this year. As long as you contribute to a retirement account and meet AGI requirements, it's worth up to $1,000 for single filers, $2,000 for married, joint filers. For this tax year, your AGI must not be over $34,000 for single filers and those married filing separately, $68,000 for married, joint filers and $51,000 for head of household filers. 10. The temporary charitable contribution deductions are no longer available. This year, fewer filers may be able to claim charitable donation tax breaks. The expanded charitable cash contribution benefits offered in 2020 and 2021 are no longer available. The temporary suspension of the 60% AGI limit in 2020 and 2021 has been reinstated, limiting the amount of charitable contributions you can claim. So, gather your tax documents and get organized. Simply gathering and organizing your tax documents ahead of time can result in a more accurate and less stressful tax return. It assists in avoiding errors that slow down your refund and may also assist in locating overlooked deductions or credits. Don't put it off until the last minute. Do you anticipate receiving a tax refund this year? Thanks for watching.